Good morning, fellow traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one broker, linking you to the global markets far and beyond. Now, this is going to be a pre-recorded YouTube video, to mean that you could find this video on our YouTube channel at HFM Kenya. Kindly remember to like, subscribe, and click on the notification button so that you are not left out in future content that we produce to time that is very or super beneficial to our financial journeys. I will give a 5-second moment of silence to allow us to like, subscribe, and share so that it can improve on our algorithms to get more people logging. Very nice. Now, with that out of the way, our series today is quite unusual in that we have the first NFP of 2025, which is the Non-Farm Payroll, and we are going to look at the dynamics of the labor market in the United States so that we are able to tell possible market direction by marrying fundamental analysis and technical analysis later on the charts. So I would share my screen. Very nice. So from a fundamental point of view, we yesterday had retail sales year on year coming from the Eurozone with precision to Germany, and it came out slightly high than expected at 2.5%. with the consensus or anticipated at 1.9 and the previous at 1%, we see a positive market sentiment in the retail sales, which informs inflation, if you may like, the cost of living. Now, having this in mind, we later during New York, during a mid-London session, had the euro sales for the entire eurozone coming out negative, both monthly and year on year, giving us some sort of mixed reaction of what is happening in that part of the world. Now, having that in mind, in the essence that we can foretell the direction, the possible direction of one currency, and we can foresee the other currency, which is the United States, to see if it is giving us much more clear direction. Caleb, you would mind stop drawing on the, yes, thank you. Yeah, so that we see possible market direction in that sense, looking at the United States to see if we have much more precise data which we can rely on to tell market direction. Now, having that in mind, we know that the economic data which is produced from this part of the world affects various asset classes, and it affects various asset classes to be able to give us market sentiment or biasness, some sense of biasness to trade the financial markets. Having this in mind, today is the big day where we have the non-farm payroll being printed out. But before we go into that, we could have a little bit of chit chat on what has been happening in the labor markets. And we begin by JOLTS job opening. And the JOLTS job opening is part of the it's part of the labor turnover survey, or JOLTS. The survey collects data from about 16,400 non-farm establishments, including retailers and manufacturers, as well as federal, state, and the local government entities in the 50 states and the District of Columbia. So it essentially picks data from 16,400 for non-farm establishments, in short, jobs, in the retail, manufacturing, as well federal states, in the local and the District of Columbia. This data, what is important is to understand what was the reading. The reading was positive, meaning that the number of jobs which are open in the United States in the regard of the definition that I've just made came out positive, suggesting that there are more jobs which are up for grabs, which is showing a good economy, therefore giving a suggestion for a stronger United States dollar. Later on, we had unemployment claims, which came out negative. Now, the unemployment rate which came out negative would suggest that there are less people filing for unemployment, so would indicate a positive economic growth. So we see the job opening and the unemployment rate both being positive. Later on, yesterday, we had the ADP employment change. And the ADP employment change would tend to, in full, it's called the automatic data processing. The National Employment Report is a measure of the monthly change in non-farm private employment based on the payroll data of approximately 400,000 entities. So the ADP, which came out negative, some of the time it is used to, at least most of the time, in fact, it's used to reflect what the NFP numbers would be. But what is the difference between ADP and NFP now that we see they have a close relationship? The main difference between the two is that NFP report covers public and private sectors jobs and is published by the U.S. Bureau of Labor Statistics and the state agency, while the ADP report covers private sector jobs. So we see NFP covering both public and private, and ADP covering only private sector. So this is why we insist to have NFP being the grand labor data projection, because you see it encompasses all the rest that we have mentioned to some sort of degree. And in this last instance, we see quite an easy merger where NFP combines both public and private sector to give us a conjoined data reading. Now, somebody would ask, Kefa, are you telling us that you do not know if NFP is going to be positive or negative? Yes, for fact, no one really knows. You cannot predict the outcome. You can put assumption, but not with certainty. If you remember, last year around November, we had data coming out negative after months of positive data from the NFP, and it was quite the lowest that we ever saw in quite some time. So the importance of this is to manage your risk and manage your trades as this data is being printed or immediately after. Now, having that in mind, today during New York session, that will be today is on 10. Kind of having a glitch. Non-Farm Payroll right here. So today during New York session at 3:30 East African time, we shall have the non-farmers payroll come out. Now this is what we need to know. We need to know that the data which was printed last month, that's the month of December, came out at 227,000 higher. So we see an improvement from the November data. All right. So the anticipated is at 160,000 jobs in both the public and private sector, away, of course, from the agricultural sector. So would want to concentrate to see, is it going to come up higher than previous and possibly consensus, or is it going to come lower? Now, this is the part that we get to interpret. If it comes out higher than expected and previous, of course, it's going to strengthen the US dollar, and we shall keep seeing the dollar index increasing and increasing in its power, being in a bullish trajectory. Of course, it would reflect these to what we trade. And if it comes out lower than expected, what is the possible market direction? Of course, we are going to see the dollar weakening. All right. Having that in mind, we'll transfer to the charts to see actual play of markets. Okay, just a minute. Getting a little bit of hitch, but sorting it out. Okay, stop sharing. Okay, now I can share. Very nice. There we go. Now, what is happening right now is we anticipate NFP to come out during New York session. Number one, on Euro USD, we begin with major pairs. We are experiencing a bearish market direction. And when we begin from higher time frame, so that we have much more reliable data to look at, we see that we are in a clearly bearish trend overall. From up here, which was around September, we are still in a downward or bearish trend to suggest that the US dollar is gaining strength drastically above its peers. Very nice. A scenario that we are possibly going to see on all USD quote currencies of the USD coming in second because of the strength of the US dollar as compared to the pairing currencies, suggesting that the US dollar economy is doing very good compared to her peers. Now, if you go to a lower time frame, we see, like we said yesterday, we expect the lows to continue being taken out, and that is exactly what is happening. The lows are being taken out, and price is printing lower lows and higher lows to suggest that we're in a bearish momentum. As we walk into New York session, we know currently we're in London session. This is for day traders and scalpers. Of course, swing traders and position traders already got in positions just managing their trades. For those who are day traders, averaging 4 to 6 hours in a trade, you would experience today we are having consolidation phase of the market to suggest that the market is in a ranging phase, to mean we are having equal highs. The highs here, they are equal, relatively equal, and equal lows, anticipating the data which is going to be released during NFP to give us medium and long-term market direction. All right, a scenario that we are going to see in most of the US pairs. So the anticipation was after the data has come out, if it comes out positive, which means more jobs in the United States, both public and private, as the definition of NFP dictates, we are going to see the lows being taken out, and Euro USD will continue being in a bearish trajectory, right? If it comes out negative, which means less jobs, of course, it would mean that the US economy is fairly doing bad, so we would see price printing to the upside, being in a bullish trajectory, right? So going to GBP USD, we see the same scenario from yesterday. We speculated possible market direction to be in a bearish trend. That's what the entire day was doing, with a little bit of pullbacks and consolidation. Today, as we anticipate NFP, just like I have said in the previous pair, Euro USD, when the NFP comes out strong, we continue seeing bearish momentum. When if it comes out weak, we might see a change in direction. For Euro, for AUD USD or the AUXI, also experiencing a consolidation. So in both cable, Euro and AUXI, or Euro USD, GBP USD, and AUD USD, we are experiencing a consolidating market. Remember, guys, this is not from the daily time frame, this is from the 1 hour time frame, which is the bridge between higher time frames and lower time frames. Relatively in context, we're experiencing sideways market. A little bit of uncertainty as we anticipate the data to come out to give us much more direction. For USD CHF, experiencing, now we are in the USD quote currencies, with the USD coming in second, we are also experiencing the same. Market is giving us equal highs and equal lows. For USD JPY, we are also in somewhat of consolidation, although we are experiencing slight movement of price to the upside relative to the previous data that we have been using to tell market direction, which was suggesting a very strong US dollar. Of course, we do not expect to see each pair, every pair being the same, for those positively correlated to mean they move in the same direction relatively but not exactly, and those negatively correlated, they move in opposite direction but not exactly. So put it in context. USD CAD, we see the highs being taken out but not as swift as we experienced yesterday, just broken out above, giving support to the fundamental analysis from the previous readings, which was suggesting a strengthening US economy. As we anticipate for NFP to have either market direction to continue in one direction or on the opposite, to see a change of direction. To cross pair GBP JPY, of course we know somebody would ask, is it affected by NFP? Yes, it is affected by NFP, but not as much as the other pairs with the USD. This is because somebody would ask why we don't have the USD in GBP JPY. Evidently, this is because when the US releases its data, the US is influencing the international economic system is quite strong that it would require other regions and countries to adjust. All right, so we see market movement and also the correlations between the Great British Pound and the United States dollar. All right, and also in that sense, the Japanese yen, in context to the global village, that the US seems to have much influence over. In short term, the dominance of the US dollar in the economic system cuts across. For commodities, for oil, this is the charts for gold, but for oil, somebody in the morning, a friend asked, does NFP affect oil? Of course, it affects oil in this regard. When NFP comes out stronger, it would mean more demand for oil, because NFP coming out stronger means more people are getting employed. More people getting employed, where are they getting employed from? From various sectors of the economy, be it manufacturing, be it the industries, right? Which would mean more power. Of course, we know that in commodities we have precious metals and energies, right? Although you cannot use only NFP to determine the direction of oil prices. But on gold, rather, their reserve currency, the United States USD against XAU or the gold, when news comes out positive, what will happen? It's going to start going down to be in a bearish trend. When it comes out positive, what will happen? Positive, we will see a downtrend or sell off. Negative, we will see the continuation of the long-term uptrend. All right? And these are among the unique days where we pay attention to fundamental analysis, looking specifically into economic data like NFP, like we have today. But at the back of our mind, we know that commodities are muchly moved by geopolitical events over time. All right? Having that in mind, in stocks, In stocks, this is the US 30. In stocks, indices in this sense, when the news comes out positive, of course, meaning the dollar is strong, we will see the overall uptrend in continuation. If it comes out negative, we may possibly see a downtrend in context. Now, having that in mind, this video is not by any chance meant for financial advice. It's purely for information purposes. So kindly do your due diligence to get into the market and observe risk management to ensure longevity of yourself in the financial markets. As we walk into the future, we put emphasis on risk management so that we are able to diversify our portfolios. As we get into these opportunities, don't get me wrong, opportunities are there for us to capitalize on, but with a sense of risk management so that in the long run, we are able to be more profitable than in losses. All right? So see you tomorrow, the same place, the same time, to do things the same way that have proven consistency. In case you need help with getting into the financial markets, in the instance that you do not have an account, kindly visit the hfm.com, and there you find the contacts of our experts, hfm.com. They will get in touch with you as soon as you begin the process of registering an account, and we will explore the possible areas of collaboration. So until Monday, let's see what NFP brings forth. See you, the same place, the same time, to do things the same way that has proven consistency. Until then, God bless.